We're back again with Mark Collinsworth, the CIO of Vere Global Wealth Management. Mark, how close are we to disaster? Now, we're speaking Tuesday night, April 8th, after another bad day on Wall Street, and I'm about to ask you how bad it was today and what's going to happen tomorrow when people are either watching this tonight or tomorrow as the markets are opening, what to expect. First of all, what happened Tuesday when the markets closed?
Let's back it up one more day to Monday. So on Monday, the market sold off hard. Then there was some fake news that came out that said Trump was going to put a 90-day pause on any tariffs. That got the stock market from being down a whole lot to being up. Then it came out that was fake news and the market sold off again. Then today the market rallied up really, really hard. Dow was up about 1,000 points. And then by the close of business, the Dow had lost 1,000 points plus an additional 300 points. And I think part of the reason on that is the tariffs that Trump is putting against the tariffs he announced last Thursday. They go into effect at midnight tonight.
All right, so what do you expect to happen tomorrow?
A lot of that's going to depend on, of course, those tariffs are going to go into effect tonight. How do those countries respond to those tariffs? Do they put additional tariffs on top of the United States? And I think what's more important is the well, credit spreads. But to answer your question about the stock market tomorrow, as we speak right now, the S&P futures are down about 80 points as we speak.
Okay, so tomorrow will be Wednesday, April 9th. So will it be a bloodbath?
As it stands right now, let me just pull up the futures really fast. If nothing changes overnight, you can expect the S&P to be down 1.53% tomorrow,
Which means,
which means the stock market's going to take another beating tomorrow.
so fairly bad news or really bad news?
Well, it depends on if we close below yesterday's low, that will be really, really bad because it just shows the market can't get any traction to the upside. The least, the path of least resistance is to the downside.
Okay, Mark, so what's really going on? Is it Trump's tariffs that are causing all this, or is that a secondary cause?
I think the tariffs are a secondary thing. The tariffs are just speeding up something that was already developing. So if you go back to before Trump was elected, credit spreads were already starting to widen. Credit spreads is that basically when I say credit spreads, that's the difference between junk bond yields and treasury bond yields. Junk bond yields are going up, which means that companies with lower credit quality are having harder and harder times borrowing money because of higher interest rates. And usually, when that happens, that's where you start to see people start to lose their jobs at those companies that have the lower credit ratings.
So, in other words, that accelerates people going out of business because of that.
Correct, because they just cannot maintain higher interest rates.
All right, so how bad can it get?
Well, I mean, technically, when those credit spreads start to widen to the degree they are, and we're not there yet, but it's right now it's the trend. We're moving very quickly in the wrong direction on credit spreads. When credit spreads get to a certain point, normally you see a recession, and the bigger those credit spreads get, the worse the recession gets.
All right, Mark, again, for the layman trying to figure all this out, make sense of it. So Trump's tariffs aren't really to blame, but it will that smooth out. It's a negotiating tool with him. And if he doesn't impose tariffs, the outsourcing of the industrial base of the U.S. will continue. So something has to be done. So are Trump's tariffs a good move or a bad move?
Trump's tariff moves, in my opinion, are actually a good move. The problem is it could be very, very painful. The move could be very, very painful to do the right thing.
For how long will it be very painful?
What you just asked right there is the problem on Wall Street is nobody knows an exact time frame. And kind of the general rule on Wall Street, when you cannot even make an educated guess at something, the rule of thumb is just to sell, sell, sell.
All right, so you will expect a continuation of the sell-off.
Correct. Until people get a better idea of when the tariff war will come to an end.
Okay, so are we approaching 1929 territory with people jumping out of office buildings?
No, I don't think we're anywhere near that.
You don't expect us to get near that.
Oh, at least not for the next 4 or 5 years.
Okay, so Mark, overall now, again, in layman's terms, the Trump tariffs aren't really the problem. The widening spread at crud is. Uh, and when will that straighten out, and what will straighten that out?
Well, I think the tariffs kind of accelerated that. I think the credit spreads were already starting to widen a little bit, but they weren't widening to the point to where it would cause any panic. Then the tariff stuff came in onto the plate, and then those credit spreads start to widen very very quickly. And and even with the credit spreads, if they widen slowly, that's not really a big problem. But when they start to widen really 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 fast, that's a problem, which is what we're seeing right now.
And why were they widening to begin with if it wasn't the tariffs? The tariffs may be making it worse, but that's not what kicked it off. So what started the widening of the credit spreads?
This is my theory on why I think the credit spread started weakening even before Donald Trump took office, started to spread open, is because people knew he was going to come in and start making cuts to the government. So one of the reasons the stock market rallied up last year was due to all this government spending. You had Biden, the CHIP Act, the Infrastructure Act, the Inflation Reduction Act. All that money was going into the economy, even though the Fed raised interest rates. So if you want to think about it, for every $1 the Federal Reserve was pulling out of the economy with higher interest rates, the U.S. government was putting $2 into the economy. So now that that money has basically stopped, and I think that's the reason the credit spread started widening, was because people knew that there was going to be a reduction in government spending, and that caused those credit spreads to slowly start widening because those companies that are basically have weak balance sheets weren't going to be getting that government money as easily or at all. And then once the tariff stuff kicked in, I think that's even put additional stress, which has kind of put it into a domino effect.
Yeah, and all that government spending, that couldn't be sustainable because it was causing inflation, correct?
Correct. It was causing inflation, and that's also the problem right now with the Federal Reserve because of the way the tariffs are being put on. And when I say being put on across the board on pretty much every product made overseas, that's going to be inflationary. And now the Federal Reserve is going to probably not cut interest rates as quickly as they wanted to.
Now, what is the role of the Federal Reserve? What should they be doing to alleviate this developing crisis?
Well, right now the Fed's not going to do anything until it actually turns into a crisis. This right now, while the Federal Reserve probably just views this as a very healthy correction in the stock market, they won't get concerned until it starts to have a major impact on the economy. Right
And
now, the sell-off so far right now has been a minor impact.
all right, so what will they do when it gets worse?
They will cut interest rates and they will try to add liquidity back to the economy, but they have to be careful with that because the last time they added liquidity to the economy back here in 2020, they caused the inflation rate to go through the roof.
So it's a delicate balance.
It's a very delicate balance.
So are you saying then, with all these factors interacting, there is no sure, predictable outcome here?
Correct. And again, you hit the nail on the head. Wall Street does not like it when they cannot make a prediction. Everything on Wall Street's based on very, very good educated guesses on what's going to happen. And as long as they can make a reasonable guess to what's going to happen, they're fine with investing in this and that. But when it gets to the point to where you can't even make a any guess whatsoever because variables are so extreme, you just basically start selling.
So we're talking about uncertainty, which makes the stock market unstable. And there's no real cure for that uncertainty anytime soon.
Correct. And that's why I've been selling stocks is because I cannot get a grip. I cannot get a good grasp on when this is going to come to an end or what even the final development or the final solution is going to be. So the easiest thing to do is hit the sell button and wait until you get more clarity on what's going to happen.
So would you advise people to go to cash then?
Well, it depends on what you own at the same time. Um, if you own if you own growth stocks, Yield spreads tend to have a slowing effect on the economy, so growth stocks tend to struggle more when yield spreads start to spread apart. But if you own stuff like, and I've been trying to recession proof a lot of the portfolios. So, your pharmaceuticals, people always own pharmaceuticals during recession because they still need their medicines. Companies that make medical devices, if you have heart problems and you need a stent, you're going to buy a stent for your heart no matter how bad the economy is, right?
So therefore, the companies that put out things that people need,
Yeah,
come hell or high water, those will remain stable or even improve, perhaps.
correct. Consumer staples tend to do very well because people still have to eat, people still have to take their medications. But stuff that people like, a new cell phone, people are probably going to be very, very reluctant to want to buy a new cell phone now, especially so with all these additional tariffs coming on, these cell phones. How much of these cell phones are going to go up in value when these tariffs actually start to hit?
Hmm. So therefore, you should not buy a cell phone. I mean, if it's going to
Well,
go,
your cell phone. If I had to guess, the price of your cell phones are going to go up here in the next few weeks.
so people should buy now then.
Yeah, you should probably buy now. But as I've learned, I actually bought a new air conditioning unit, and I actually got hit with a 10% tariff on my new air conditioning unit today.
Okay, well, we'll see how it all turns out. So, Mark, all right, we'll be following this because everybody is, going nuts over this. What's going to happen? People are thinking they're going to, it's going to be curtains for them. But you're saying it's not really time to panic, right?
The time to panic's already passed a long time ago.
So, what do we do now?
I'm just kidding. Right now, I mean, if you own high quality companies, usually when you have a recession or actually have a real true bear market, they normally take away about 30% of everything the bull market made, which is usually about roughly 2 years.
No.
If you can write it out, I mean, we're not at the point. So tell me, so there's two kinds of bear markets. There's the mild bear market, like we saw back in the early 1990s. I'll even say the dot-com bubble was a mild bear market. But when you start getting into those harsh bear markets, which are rare, like 1974 and 2008, and again, we're not there at that level yet. Those are the ones you definitely need to go cash on.
Okay, now getting back to tariffs now before we close the session. Do you see Trump's tariffs as necessary? And what will be the long-term effect? And how badly will we be hurt until it kicks in?
Ooh, I think the tariffs are actually good to a degree on certain items. There are certain items that foreign governments or foreign countries actually do a lot of cheating on. So I think the tariffs on those items do level the playing field. However, they're also putting tariffs on things that probably don't need to have tariffs put on them. And the problem I have with that is if the government is stepping in to help out businesses, what you're essentially doing is you're basically allowing that company to not have to innovate and no longer try to stay competitive. That's one of the reasons why these foreign countries have put so many tariffs on the United States is they just cannot compete with the manufacturing power and the innovation of the United States. And I'm afraid longer term, if you put tariffs on there, that will basically make these innovators say, well, hey, why do I need to innovate when the government's going to come in and give me that extra playing field, extra playing?
But the tariffs are so lopsided that, how can American businesses compete when, the tariffs are so high on
Well,
one side but not on the other?
that's the thing. They're that's the reason why those foreign countries have had to put tariffs on us already is because they just really couldn't beat our products. Our products were just so good that these foreign countries had to put tariffs to protect themselves. Because wait a minute, uh, look at it this way: what country invented the airplane? The United States. What country invented the iPhone? The United States. What country invented the semiconductor? The United States. So the United States is the most innovative and competitive country and industry conglomerate in the world. These foreign countries had to find a way to counteract that. They couldn't, I mean, Europe couldn't make a semiconductor. China couldn't make a cell phone by itself. So this is their way of protecting themselves. And I'm afraid if the United States goes in and tries to overprotect, it may take away some of that innovative power that the United States has grown to be the United States from.
So, I mean, there's a downside to tariffs then.
There is a downside of tariffs. A few of the tariffs were actually probably pretty good, but putting tariffs on everything across the board, that's getting kind of excessive in my book.
Well, also the concept of reciprocal tariffs. Trump is saying that if a country decides to lower its tariffs to zero, we'll lower ours to zero as well. But then what happens? Because China could produce a product for so much less because of cheap labor. So if it's a reciprocal zero tariff, we still lose to a country like China, don't we?
Well, what's going to happen in that situation, you kind of already see it happening, is the way China is getting around the tariffs is they're starting to devalue their currency. So, for example, if the United States puts a 10% tariff on China, all China has to do is lower their currency by 10% less than the dollar, and then you're back to where you were. There's no effective tariff in place.
So are you saying then that no matter what Trump does with China, it's not going to be effective?
Well, part of this is he keeps saying that the tariffs are there on some of these countries are there because of wrongful trade tactics, which is currency manipulation. But the problem there is how do you really stop those countries from manipulating their currencies? There's really nothing that you can do to stop that except just stop doing business with them.
So, but I mean, that's not practical either, is it?
That's not. But if you do it long enough and hard enough, and I'm talking long enough as in a few years, you could eventually force that country to stop doing it.
So overall, eventually, will Trump win?
I think Trump will probably win in the long run. I just think it's going to be a very painful event to get there.
So American consumers will be hurt significantly in the meantime.
Well, I don't want to say significantly at this point because they are in negotiations, according to Trump and the uh, Treasury Secretary. A lot of countries right now are wanting to negotiate and try to fix this problem before it becomes a serious problem. So as long as they can negotiate and cut a deal before it becomes a serious problem, we're in good shape. But this is one of those things. How long does it take for them to negotiate? Because
Yeah.
that's why Wall Street's in panic mode is because we just don't know how long it's going to take.
Yeah, well, I mean, a lot of people are saying this is really just a negotiating tactic on Trump's part, and he's pretty good at negotiating, right? He's pretty good at making deals.
Correct.
So maybe he will win sooner than we expect.
Correct. I think he will win in the long run. Um,
But
it's just going to be very painful to get there.
and it's going to be a while though. It's not going to be a quick victory.
I don't think it'll be a quick victory for the simple reason a lot of these countries that he's negotiating with, they're probably sitting back right now sweating it. They probably want to cut a quick deal, but they don't want to look weak and cut a quick deal. They want to sit there and kind of drag it out a little bit and kind of flex their muscles and to make themselves not lose faith. Nice.
Well, it sounds like they're already caving though. A lot of them are reversing their original hard stand and say, yeah, we're ready to negotiate.
Correct, they are, and that's the key thing. They're saying didn't want to negotiate. Now they're saying they want to negotiate, but what are they going to ask at the negotiation table? Because when you go into a negotiation table, you always ask for more than what you actually want, just so that gives you room to take those things off the table.
Trump is generally credited with knowing how business works, knowing how the economy works, much more so at least than other presidents. Is it a well-deserved reputation? Does he really know what he's doing with tariffs and other economic mechanisms?
I would agree with that, except for the tariffs across the board on everything. I mean, he put a flat 10% across the board, and I'm sure he's using that as a negotiation tactic because a tariff on everything that comes into the United States, that's probably not a wise economic decision, but it's a very powerful negotiation tool.
Yeah. All right. So wrapping up now, Mark, for the week ahead in the stock market, should we still take cover?
I say get defensive. I say have a little cash on side. I always tell clients, you never know when something's going to happen, when an emergency is going to happen. So always keep a little extra cash. You may just need it because you want to buy a car or make an extra payment on your credit card or something. So, and you never know when opportunities like this might pop up. But at some point, when things become more clear, there will probably be a very excellent buying opportunity. But again, the question is, when does that occur?
Yeah. I mean, that's happened before, where the market went down and then there was a buying opportunity. It was like a fire,
Correct.
and people eventually made money on that. They made out, right?
Correct. Yeah. So, like I tell people, a bear market is a bull's best friend. Um, like for me, I love bear markets because they're painful, but the stocks I buy now or in the next several weeks, those stocks, hopefully, 3 or 4 years down the road will be significantly higher than where I bought them. It's painful, but that's just the way the rodeo plays.
Okay, cowboy. That's it for now, and we'll stay in touch with Mark Collinsworth, the CIO of Vere Global Wealth Management. That's a mouthful. So,
Well, thank you, Larry. And as I always say, when things look bad, when things look like there's no hope and everything going to hell in a handbasket, it usually is.
thanks a lot for that upbeat ending, Mark. See you soon.
See you soon.